Thank you so much, Olympus, for joining us today. I think as a start, could you please introduce yourself and describe your work and the impact you're trying to have through your work?
My name is Olympus Manthata with the Development Bank of Southern Africa. I belong to a division called Project Preparation Division, but I head the Climate and Environmental Finance Unit under the same division. So our role really is around, mobilizing climate resources from various sources, which we then blend with own DBSA resources to unlock projects specifically in the climate and environmental space. In that regard, we are accredited to the Global Environmental Facility and also the Green Climate Fund, which we, in the main, source our climate resources from. But we go broader than the two mechanisms that I've mentioned. And in essence, what we try to do is, in our operations in the sub-Saharan Africa and the islands, we look at how we can support countries in implementing their NDCs. As you know that financing can be the challenging part. So we see ourselves playing a very important role, especially as one of the few, direct access entities of the GCF. We try to use that role to do our best to support countries in that regard.
Thank you. And from your experience, what are some of the key barriers and opportunities to increasing the flow of climate finance into sub-Saharan Africa? And specifically, if you could reflect on the need for increased flow of finance to subnational governments.
Yeah, thank you for the question. I think, the starting point is that, it's clearly accepted that, your public resources, aren't sufficient to achieve the goals that we would like to achieve from a climate point of view. So what is key is how we can use these resources to unlock private sector investment. And so we do quite a lot of work in designing, financing instruments that are fit for purpose with regard to, the ability to crowd in private investment. That is the one end. But I think on the other end, the challenge that you have is that, the ability and the capacity to develop projects that are bankable, or at least projects that are, funders can at least be able to consider, are quite limited. So we try to build financing instruments that, to a great extent, encompasses project preparation or even, your early design phase, in such a way that you can be able to, have instruments that talk to the various stages of project development, which we believe is quite key.
Thank you. And how do you see the kind of the immediate and also longer term impacts of the COVID-19 pandemic impacting on these barriers that you've unpacked for us?
I think one of the immediate impacts we have felt aside from as a DFI is obviously, you start having a bit of liquidity constraints. And, obviously that impact leads in many cases to cost of funding, skyrocketing. And, you also see resources, if you are thinking of the municipal space, being diverted to other, what would be referred to as more urgent matters. So the question then becomes, what is the best way to respond in the midst of those, challenges? But I think what remains useful is the ability to, to have appropriate financing instruments, but also, the ability to channel the concessionality that they are receiving from these sponsors, or to make possible the implementation of projects. So, I think it's quite key, and I think it's also important to keep reminding ourselves in the process that the climate emergency should not be a casualty of the challenges that we see emanating from the COVID pandemic. Actually, somebody said to me that it's possible to find maybe a cure or even a preventative measures that you can put in place for COVID. But unfortunately, you cannot get a cure for climate change. So you cannot remove it from the urgent matters that needs to be addressed.
Definitely. And I think the need to kind of be reflecting on the real challenges that COVID has has created with regards to what, as you mentioned, liquidity challenges, both in terms of at the municipal level, but also within DFI is very interesting. And your comment related to the increased cost of financing, I think that's a critical matter that must be addressed, especially in, there's the opportunity around how the recovery funds are spent, both from national governments into national economies, but also coming from kind of multilateral agreements into national economies in Africa. And so now kind of reflecting another angle of to look at these kind of barriers and opportunities, how do you see improved multi-level governance, or as we call it in South Africa, intergovernmental cooperation, being an enabler to increase the flow of finance to cities?
I think for me, the key thing is, I mentioned earlier the importance of unlocking private investment to support, climate-related initiatives. But there's also the important matter of saying, how do you use the resources alongside fiscal provisions? Because in many ways, it is also important to understand the challenges that come with the normal processes of releasing fiscal resources, and blend that with the resources that are available from your climate resources. I think that is quite key, so that in the first place, it's important that there is coordination in terms of how these funds are used, and also to understand the gaps that you aren't able to address through either fiscal resources, to then say, how do you consider fiscal resources, private resources, and also resources that are coming from your climate resources in a coordinated manner to achieve maximum effectiveness. I think that is quite an important matter to consider.
Definitely, I would agree with you on all those points. And so a third lens that I'd like us to reflect on is, how do we use the funds that are coming in from external sources, but also the fiscal allocations available for climate action projects, to also at the same time improve gender equality in our cities?
I think that is an important question, and I'm sure you'll be aware that with the likes of, let's say, your GCF and also the GEF, gender considerations are quite important. Actually, they are quite they are an important factor, in terms of how you design your project. But also, if you look at even at a national level, we know that it is important that gender issues are considered. So, for example, for us in our funding plans, there is a clear requirement that you would have a gender plan that supports the project, and that becomes very much an annexure to the contract that we'll have in place with whoever will be receiving the funding from our side. So in essence, for anybody who is advantage to them with regard to their ability to accessing, this type of finance sources that we are talking to. So I think it's an important matter that we cannot ignore. But I think it's not just about attending to it for the sake of receiving the funds. It is an imperative, and it makes business sense.
Definitely. And I think that in terms of what it actually means per project is definitely work that can be bolstered through the project preparation process. So we don't only necessarily think of the technical and financial, but also think of the broader socioeconomic impacts of the projects. And I think that element can definitely be more capacity can be built on how to make that really tangible for each project and be seen as an opportunity and not some burden that's an additional something additional to the project impacts. So now just pivoting the conversation to actions. What specific actions do you believe cities need to take in order to be more able to receive funds and also kind of access the funds available to them?
So for us, what we think is important is, really going to the starting point with regard to planning. We think just from the start, when planning is done, climate issues have got to be integrated into the thinking. And that would then be reflected in the projects that emanate from the initial planning. Because what we have seen as a problem is when people at the end of the project are trying to access climate resources, and you find that you are trying to press feed matters that you had not considered in the beginning, that becomes a bit of a challenge. So, we think it's important to really start at that point. But on our side, what we are trying to do is, based on our understanding of the challenges that we see, especially within cities, is to say, we look at designing programs that would respond to that. For example, what we would do is to say, when we put together financing solutions, we would look at platforms that would help take projects from concept through to project preparation, take them through to bankability. And when they reach bankability, they are designed in such a way that they respond to an existing funding platform that we would have designed. And we think that is the way, we should approach these issues. I'll give you an example. Like now we're looking at, wastewater treatment. There's a lot of, components to look at if you look at the whole value chain around wastewater treatment. And we tried to design a platform that would respond to the various stages and have in place financing responses that would be, able to help at each stage of the development. And we think that is the approach that we should look at. Otherwise, you keep having, maybe feasibilities done at this point. From there, they just end up in file 17 because there is no clear way from the end of the feasibility towards implementation. So we try to look at the whole value chain.
I think that is really important in terms of understanding that, especially when these considerations are maybe newer to some cities and there's need to build capacity, that does come at a cost. And we do need the financial resources to support right from that kind of strategic almost portfolio level within the municipality of planning down to, and then kind of developing the potential pipeline of projects. There is significant work that, I think we all now understand and that we see from moving from a project idea to moving even into a usable project concept. And especially when it comes to, the issues of scale, and kind of developing even programs from project ideas. That also is quite a complex process in municipalities, and also when you're trying to now package maybe a regional approach. And as I said, I think it's really important to take cognizance of all that work that needs to take place within programs that are being designed. So, that's a great approach in terms of what DBSA is doing. And then in terms of, if we look at if we say cities are really kind of sitting on the demand side of finance, if we look now in terms of some of the supply side actors, the institutional investors, traditional private sector players such as banks, as well as other kind of financing institutions and maybe even national governments, what would you say are some of the actions that they need to take in order to enable greater flows of finance for city climate action?
I think the way I would like to approach that question, Rebecca, would be this way. We have always emphasized that we think, development finance institutions like ourselves, the DBSA, play an important role because, sometimes you look at the expectation that is placed on the private sector. It doesn't apply in every sector, but in many cases there might be that you've got barriers that have got to do maybe with regulatory or policy issues. And, the DFIs in terms of the space that we occupy, most of these DFIs like ourselves would be, government owned. Therefore, one could assume that due to proximity, you can be able to some extent influence things around the policy and regulatory issues. But on the other hand, we are also co-funding with the private sector, including your commercial banks. So one could argue that, you understand the kind of issues that are, expected. For example, the risk return profile that they would be comfortable with. I really believe that the DFIs play that critical role of players in a way that makes it easier, to pull in private investment and to ensure that the regulatory environment is ideal for implementation of projects. So I really believe we can continue to play that important role of, ensuring that the flows from the, for private sector side increases with regard to support to climate projects.
Great, thank you. I think that's a really valuable input in terms of the important role that DFIs do play in terms of almost like a bit of an intermediary. And the importance of intermediaries in enabling finance is critical, definitely, especially in supporting in areas where maybe those intermediary institutions aren't as well established yet across the continent. And so the role of well-established DFIs is very important. Thank you very much. That concludes our interview for today, and I really appreciate your time. Thank you so much, Olympus.
Pleasure.